It's Josh here. Remember to like and subscribe. Happy to grow the channel. God willing, helping you guys. Looking at SPY here. So we obviously had the CPI print yesterday. Way higher, 9.1%. I think it was 1.2 month over month, 9.1 over the year. So that means everything got 1.2% more expensive from last month, which is obviously insane. And not great for the market. So I would expect the Fed will now raise interest rates a full percentage point on the next hike. That's also kind of unprecedented. So inflation is getting worse, which means it'll be rough for the market. So I hope you've watched the earlier videos where we talked about buying puts. So if you take a look at what's going on here, this is an indicator, this green and red that I actually made with ThinkScript. And you can see the SPY has responded pretty well here to this. When it's wide in the green, you buy. When it's wide in the red, you sell. And then I use my normal trend lines and price numbers and everything. So here what happened was SPY came down and we had this drop off in the morning and it hit this green here. And then it actually rebounded, which was quite surprising to me, but it actually rebounded back up to this trend line. And you can see it's holding this so nicely. This is the wick line. It had been the wick line of the candle there, and then this had been the candle line, and now it's reversed, right? This is now the wick line, and this is the candle line. So what I would expect today, and it's starting to show up in the pre-markets, is a big drop here. What's going to happen is this indicator is going to disappear, or this indicator will grow, and it'll catch it somewhere. But honestly, guys, I think this print, you got the Fed meeting in 2 weeks, so not this week or next week, but the week after. And the market's gone down like every Fed meeting. So I would expect us to drop pretty heavily here, probably to this trend line. Let's see, this is 363, this is 370. It's probably going to be somewhere in between here. And this is where you're headed, like we've been talking about the whole time. You're headed to 350. So take a look, be careful when you get to 350. We're probably going to be looking for a bottom. Let me just zoom out here a little bit for you guys. The other mark, you can't see it there, but the other mark to look at on the year is this 335. So we'll probably end up here in the 350 range by the end of July, and then this 335 range would be a real bottom. That's the pre-COVID high. So if you get that 335, this is where people are going to be buying heavily in between this range. And I've heard people talking about buying here at the 350 mark as well. So this is your buy range right here. If we get there, remember, and I have this note on here that you can see, it's also this 335 is 30% down from the high. That's the average bear market. And it would represent, if earnings kind of stay flat or go up a little bit, it would represent a 15 PE ratio on SPY, which is the average as well. So 335 is what you're looking for. Hold on to those puts, guys, as we go down here. If you don't have them, look for good places to add put options. I had some for this Friday, and I just added the 380 puts and for 2 weeks from now, which was July 29th expiration. And then I also added the 375 puts. So those 380s were already in the money. I don't expect us getting back above this line anytime soon. And then the 375s are a little more risk so that I can use the gamma to my advantage. So hope this helps, guys. God bless. Enjoy the day.